Assalamualaikum warahmatullahi wabarakatuh. Thank you for the opportunity. We are from the group 5 and we'd like to explain and also discuss to you about the material which is in unit 5 called assets accounting. But before we move to our explanation, I'd like to introduce you to our group members. So in group 5, there are 4 members, which is first, me, Lazuardi Imani, with student number 047. Second is Fitri Nur Cholisa with student number 257. And the third is Yuni Farida Aprialinda with student number 281. And the last is Berthalia Permata Putri with student number 440. Okay, guys, without any further ado, I'd like to explain to you about the first material. But first, I'd like to give the unit overview about what will we learn in this unit. So in this unit, we will be introduced to a set master records and see how posting to them is connected to the general ledger through a reconciliation account. We will introduce the Asset Explorer report and will show how it summarizes posted and planned activities for an asset. Finally, we will examine some of the closing procedures in asset accounting, such as running depreciation and executing the asset history sheet report. Next is about the master record in asset accounting. So, we will begin our study of assets by discussing the assets master record. The key components of the asset master record will be examined and we will see how we can view the link to the general ledger reconciliation account from the asset master record. The asset class is dealt with next. Here, we will learn how it is similar to the account group in general ledger, account payable, and account receivable. We will study depreciation areas and examine how depreciation is calculated in MySAP ERP financials. In this lesson, we will discuss the asset master record um, and we will discuss how the asset master record is created and the importance of the asset class. We will also discuss how the reconciliation account is associated with the asset master record. We will see the depreciation areas and how they are displayed on the asset master record. Explain that the depreciation areas are made up of depreciation key, estimated life, normal depreciation start date, index, previous usage, and we will also introduce the asset explorer report. Okay, next I will talk and explain about the assets master record, assets and assets class. So assets master record is similar to the creation of customers and vendors. One of one has to create an asset master record before it can be posted to. Before an asset is posted to, it has no value. The asset master record contains general data information about the asset, such as when the asset was acquired, when it was capitalized, account determination information, and asset values. And the next is assets. So assets is each assets belong to a company code and business area. All postings are made for the assets. It is about the acquisitions, retirements, depreciations, and so on are posted in the assigned company code and business area. Additionally, you can assign the asset to various management accounting objects, which is about the cost center, internal order, activity type, and so on. And logistic organizational unit. So it is for reporting and selection purposes only. And next is about the assets class. An assets class serves the same function as an account group for customers, vendors, and general ledger accounts. Assets are assigned to an asset class at the time of creation. The account determination key assigned to an asset class points to accounts in configuration for various postings to the assets, such as for acquisition, retirement, and so on. If you drill down on the account determination key in the asset master record, you will see the general ledger account for APC, which is the acquisition, production, and construction. Asset number ranges are attached to the assets class, and the asset master screen layout is defined at the asset class level. Asset classes also contain control parameters and default values for calculating depreciation and for other master data. To find out more about this in IMG, choose the following path, which is the financial accounting, asset accounting, organizational structures, and assets classes. The asset class is the main criterion when defining the asset. Each asset must be assigned to one asset class. In the asset class, you can define certain control parameters and default values for depreciation and other master data. The asset class is similar to the account group in that it defines the screen layout of the asset master record and has a number range assigned to it. Assets that do not appear in the same line item of the balance sheet, such as building and equipment, are typically assigned to different asset classes. Additionally, there is at least one special asset class for asset under construction and one for low value assets. So that's all about my explanation, and next will be delivered by my friend. Thank you.
Okay, thank you for the opportunity. Let me introduce myself. I am Fitri and then my student number is 257. And now I will explain about the depreciation areas and control data in depreciation areas. So depreciation areas are standard, delivered, and are country specific. So they contain all the rules for depreciating various types of assets, for example, country tax laws, and then asset valuation. Often asset balances and transactions need to be valuated differently for various purposes. So for various valuation methods, there are examples. First is financial statements based on regional requirements, financial statement for tax purposes, if a different depreciation method is allowed, and then controlling or costing, and then parallel financial reporting for group financial statements like IAS, USGAP, and etc. And then replacement value or using an index figure to keep more than one valuation basis. Depreciation areas are kept in the SAP system. So next is separate transaction figures are kept in each area. So first is per assets and depreciation area. Second, for individual value components such as balances, depreciation, or remaining book value. And then the last is in the asset master records, different data for valuation areas are stored. So if you want to know more about the depreciation areas, you can check in our ebook. There is a figure 89 and then 90 about the depreciation areas and control data in depreciation areas. For example, like in the depreciation areas, there is a book depreciation, right? So in the book depreciation, they will ask about the what should be depreciated, and then how long will be the asset will be used, or when was the asset placed in service. Should high replacement cost be determined each year, and how long has the assets already been in service, like how, when, what. There is much more information in book depreciation. Thank you. So let we next in the next slide. Okay, so next is account determination. So the asset is attached to the general ledger using a reconciliation account. However, contrary to customers and vendors, the reconciliation account is not put directly in the master record of the assets because the assets class is tied to an account determination key, which points to the various accounts to be posed to for various transactions. So since the depreciation areas in asset accounting don't exist in the general ledger, these values have to be posted to various general ledger account in the general ledger. So first is balance sheet accounts, which record the adjustment to the asset value, and then depreciation accounts for depreciation and appreciation. So the assignment of the GL account to different valuation areas is stored in one single account assignment key. This key is entered in a asset class and appears as a standard value on the asset master record. So account determination, there are 3 points about that. So first is book depreciation, second is cost counting, and then parallel depreciation. So first is book depreciation. Book depreciation, there are 2 points about that. So first is balance sheet accounts, and then depreciation account, and then cost accounting is for cost accounting depreciation accounts, and then the last is parallel depreciation. So parallel depreciation are kind of 2 points. So first is balance sheet accounts, for example IAS, and then the second is depreciation account, for example IAS too. So next is group asset and subnumber. So group assets are assets that are depreciated at the top group level of a production line that has many machines. Subnumber are used to represent components of an asset. So in this section we deal about two concepts, group assets and subnumber. So group assets is for like telephone poles, each of which is in itself an asset or a production line that has many machines. So like in the USA is, for example, tax reporting valuation are done at group level like that. And then if you want to know more, there is in the page of 314, there is about the figure 91 about group assets and subnumbers. So a group assets has its own master data. Several main assets can be assigned to a group assets. Depreciation is calculated at the group asset level. This is important in the certain industry, as such as, for example, telecommunication. Maybe in Indonesia there is Telkom like that. Okay, next is transaction type and asset transaction. So transaction type is included when posting to an asset account. So the transaction type is necessary for asset accounting because it specifies exactly where the asset posting is listed in the asset history sheet. The transaction type is the distinguishing characteristic of the various asset posting. For example, buying and selling or credit memos, acquisition from internal production, adjustment postings, retirement without revenue, and then depreciation and appreciation. So in the ebook there is in page 324, there is figure 93 about the transaction type. So transaction type is like the debit and credit, like for example acquisition, retirement, transfer, clearing, depreciation, appreciation, revaluation, and so on about that. And then so assets transaction. So asset transaction is acquisition and retirements can be posed in various ways to meet the organizational and business requirement of the company. So in asset accounting we can post in the following ways. First is without a vendor or a purchase order, the offsetting entry is made to a general ledger clearing account, and then next is to a vendor but without reference to a purchase order, and then the last is via materials management using the function purchase order, goods received, and invoice received. So if you know about asset transaction, in the two subsidiary ledgers and thus two reconciliation accounts are hit vendor and asset. So if you in the page of 325 there is about the asset and general ledger. So like first is asset transaction using non-integrate clearing accounts, and then if you are account payable or account receivable, and then asset transaction from material management. So there is about the figure or picture that will help you better to know more about the asset transaction. So when posting to accounts of the subsidiary ledgers, there is to the assets and to the vendor. The reconciliation account of both subsidiary ledgers are updated in the general ledger. And then thank you, and then the next slide will be explained with my friend. Thank you.
Okay, so thank you so much for the opportunity. My name is Yuni Aprialinda and my student number is 281. And now I'd like to move on to this slide which explain about the assets under construction and assets explorer. So the first, we are going to talk about the assets under construction. So the expenses for assets under construction can be managed in two ways. First is in the application component investment management. Here we can create, post, and manage investment orders or investment management projects. These orders or projects are then reconciled with the assets under construction. The investment management provides extensive functions for supporting management investment procedures. Second, if the investment management is not used, the assets under construction can be posted to directly in assets accounting. And once all the assets are complete, the master data must be created for the assets which the AUC will be settled to, and the values from the assets under construction account have to be settled to one or more completed assets. The costs are distributed to one or more assets with the help of a settlement rule. This rule specifies which percentage of the AUC is settled with which asset. Okay, so now we are moving to the Assets Explorer. So the Assets Explorer offers an overview of the activities for an asset. Here we can see the transactions that have been posted to the Assets Plus plan and posted depreciation per area, per period, or for each fiscal year. Then we can see the details of accounting transaction. And also we can conveniently switch to view another asset without leaving the screen. Okay, so next in this slide, I'm going to explain about the assets closing. So closing can roughly be divided into two types of work. First is legal requirement which required by the government, and second is technical and organizational tasks which preparatory steps that are necessary technically or that support the accounting organization. With the fiscal year change program, this new year is open. This allows you to post to assets in the new fiscal year. The year-end closing program checks whether the depreciation and assets values are posted in full and assets contain error or are incomplete. If the program finds no error, it updates the last closed fiscal year for each depreciation area and it blocks posting in assets accounting for the closed fiscal year. Thank you so much. That's all from me.
Hi everyone, thanks for the opportunity. Here I'm Berta will continue the presentation about the topic is inventory. So in the SAP system for inventory, we can create one or more of the inventory list, and that inventory list are given to the employees that perform in the inventory. They will make a note of all the deviation in the list and will forward it to the accounting department. and then the employees in the accounting department will make a correction if it's necessary. And the next slide. We will talk about depreciation posting run. So the depreciation is run in the periodic processing folder within the asset, and the depreciation itself is not posed as a part of the exercise, but we can check it by following the menu path from the fixed asset. Then we can choose the periodic processing and then year-end closing, and then we can click undo and select the entire company code. The depreciation itself, including the normal depreciation, special depreciation, and unplanned depreciation, is initially kept in the form of planned value in asset accounting. And the depreciation itself will actually post in the asset accounting and the general ledger only when the depreciation posting run has been complete, and the depreciation itself is posted to corresponding the depreciation account in the general ledger, and also to assign the management accounting object that assigned to the asset of master record. The next slide, that is the last topic, is about the asset history sheet. So the asset history sheet itself is the most important and the most complete evaluation that available for the closing. And as a financial statement, the asset history sheet is heavily based on the country-specific requirement. That's why it is possible to make many versions of the asset history sheet. And each of the asset history sheet version can contain various asset history grouping, such as the first is the book value at the beginning of the fiscal year, and the second is the acquisition, the third is the retirement, the fourth is the adjusting posting, the fifth is the depreciation, and the last is the book value of the end of the fiscal year.
Okay, so that's all from us. Thank you so much for your attention. I hope this video can be useful for all of us here. And yeah, wassalamualaikum warahmatullahi wabarakatuh.